Hi there, Addy here from TorontonianOnline.com, here with a great new property. Some of you might have already seen this one because I sent this out as an email before and sent it in my database to select few people that I know are looking for for such properties. But for the others that haven't seen it, here's an opportunity. I hadn't seen the property when I sent my imill before, so now I've gone through it. I've done a little bit more detailed analysis. And here it is. So I just wanted to run it through. It's in Mimico. It's if you don't know where Mimico is Park Lawn and Lakeshore area. That's where Mimico starts, and then it's south of Etobicoke going all the way till we hit Mississauga. So Mimico is the area that is closest to Toronto. The area profile is quite diverse. So you have in some industrial areas over there. You also have a lot of residential. You have some multi-million-dollar houses, and there's a lot of development that is taking place. The most notable right now is Ile du Soleil, which is right at the corner of Park Lawn and south of Lakeshore, going towards Toronto. So there's a huge development that is taking place over there. So this is an 8-unit building. It has one bachelor. On paper it was bachelor, but when I saw it, it's more like a guest room, if you could say that. It does have a small hot plate, and it does have a waffle washroom. So you could rent it out, but I would recommend that you use it for your super. So somebody that is going to be staying there, you're not charging them any rent. The problem with this building is that the rents are really, really low, and there's maintenance that is required. So it requires the right type of investor. So you need to have some hefty down payment. You need to have some money for the renovation. And this is a long-term project. Because there's tenants in there, you have to find ways of removing the tenants from there, which is you either pay them so that they can go away, or as tenants are leaving, you would actually start renovating the units and bringing them up to par. So if you want more information about that or to discuss it, we can have a conversation about it. So let's run through the building. The square footage of the building is about 6,500. That's the lot size. The actual building is around 4,600 square feet. Purchase price they're asking is 115. The cash investment required is 871,000. I'll give you a breakdown of it. It's got 8 units in it, 1 bachelor, 5 one-bedrooms, 3 two-bedrooms. Apartments are all individually metered. The renovations per unit are probably going to be around 20,000 per unit. So 20,000 times depending on how you want to do it. You want to do it 8 units or 9 units. 9 units, 180,000 plus 40 to 60,000. So I'm estimating you would require about 250,000 almost to do the work that is required to bring this property up to par. Now I have another video afterwards where you're going to be able to see what the future value is going to be. But hold on to that thought. We'll get to it. So if I go through the numbers over here. So the purchase price is of 115, because it's a property that doesn't have a lot of income. As you can see over here, the net operating income is 29,000, which is really, really low. The property will require somebody to put a large down payment, because based on this, the property is only worth less than 600,000. So they will probably require you to put a down payment of about 50%. And then I put the improvements at 250,000. So total cash requirement on this project is 871,000. Cost per square foot is around 177. Rent per month is around 0.95. It should be close to $2 or $2.10 in that particular area. Cost per unit, this is where this property shines, is 143,000, which is amazing. I haven't seen property this low in probably 10 years in Toronto. Loan to cost ratio 50-50. I did it at the term of 25 years and 3% interest rate. Now the interest rate is probably going to be a little bit higher depending on which bank you're using. And you would do a short-term mortgage in the beginning. So you would do a mortgage that is probably for a year or 2 years. And then once you have all the work completed, you would go back, you can have it appraised and refinanced, and the property will be worth a lot more. So the money that you have put in, you can either take it out, or you can have a smaller mortgage at a very small price. A lot of times what investors would do is they would do an equity takeout mortgage. So all the money that you have invested in there, you can take it back out. And because you have taken all your money back out, now you're free to go and invest it in something else. So here's a breakdown of the expenses. Taxes are 14,817. Insurance, they didn't have the insurance cost listed in the financials I got, but I added it in there for 3,600. Hydro is 2,041. So what this is telling you already is that the tenants are paying their own hydro. Heating and gas is 7223. There's a hot water radiant heat exchanger. That is what they're using. There were additional utilities, 3,408. It just showed up as utilities. Don't know exactly what that is. My estimate is basically there probably is 1 meter that is being paid by the landlord that they didn't make a proper note of, and that's why it is showing up as a separate. Cleaning and maintenance, 7383. Maintenance fees of $49.15. That includes the bookkeeping and a lot of stuff. So the net operating income, as I had mentioned, it's not very, very good. $29,538 is the annual net operating income on this property. This is a further breakdown of the buy and hold projections that you can take a look at. Again, this information is included in the bottom. This is the other thing I want you to take a look at. So I only have 8 units listed over here. So $925 is what they're charging right now for a 2-bedroom. This should be close to, in my opinion, close to $1,500 at the very least. I know there are units around the corner that are renting for $1,550 to $1,600 right now. So there's a huge market over here. This is the super that is paying $648 for a 2-bedroom unit. 2-bedroom, another 1-bedroom for $638. These two definitely need to be changed out. 1-bedroom at $590. Again, really, really miserable over here. If you look at right here, $750, $850. These are still low. The tenants are paying their own utility. Even then, like, these numbers should be much higher. And this is a reflection of what the units look like right now and where there's a room for improvement. I'm going to take a step back. It might make you a little bit dizzy because I want you to take a look at a couple of things. So some financial metrics over here that you're seeing. 59.5% is the percentage of income that is going towards expenses. This is really, really ridiculous because this type of property should be running at around 20 to 25%. Like, if it's running at 20, it's really, really good. I've seen properties like this in the city of Toronto running at 18%, and you can make a lot of money on these ones. But the problem is that the property is not being managed properly. So you need somebody to come in to actually really clean this place up and run it like it's supposed to. There's a couple of expenses that I don't know if I mentioned. There's a hot water tank. There's one hot water tank over there, but it's a little bit small. It needs to have another hot water tank added. I'm surprised none of the tenants are complaining. Well, why would they complain? Because they're getting such a good deal. None of the tenants were complaining about hot water running out, but I would imagine if you're doing a really nice rental, you're going to have some better services included in there. So now this is the future value. So I updated my numbers. I'm going to go all the way to the end, and I'm going to start with the rents. So 2-bedroom units, I put the projection in at $1,600 per unit. When I had sent these numbers before, I put the future value around 2.3. And that was, in my opinion, really lax because when I went and take a look at the unit, they actually definitely need some help. And I put the 1-bedrooms at $1,200. So based on this, your gross for the year is going to be around $135,000. So I'm going to scroll back again. Oops, sorry, start over here. So a purchase price of 1.1 at 20% down. At your first mortgage would be 1.44. Down payment of $360,000 and buying costs is around $772,000. So if you are looking to sell this property, or what the future value of it would be. So cash investment required with $432,000. And as you can see, monthly rents right now at 1.74. These are still low. You can still push them a little bit more. $277 cost per square foot. Cost per unit is $200,000. So just sheer on the cost per unit over here, you can actually push it a little bit more. Even $225, $250, the area can sustain that. I've seen larger buildings sell for a little bit more price per unit in the area. You're at 80%, 1.44 million, 3% mortgage would be 68,1474. So gross rent right now $11,300. Operating income that's after your vacancy loss of 2%, $11,074. Taxes are running at 11%. Total expenses, I haven't changed the expenses again, so you can find additional efficiencies in here, running at 33%. So stuff like I took out the management over here, and I've added the $500 per month for the rental unit that we have added. Let me just show you quickly. So the super unit over here at $500 a month, we're basically taking it out in an expense at $500 a month, so the super will be staying free, and then they could take care of the building as they're going along with it. And the cash flow that the property would generate would be $66.39. Again, this is a very macro view of the property. We do have very select showings available. Do get in touch with me ASAP. For the people that have already contacted me, I will be giving you a call later on today, and we're going to be discussing it in further detail. Questions, concerns, 877-439-2339 or Addy at heyaddy.com. Take care, and we'll talk soon. Bye-bye.